blockchain is a type of distributed ledger. If you want to be very simple, it's about a database, how you record and you share data. Now, that data can be permission, or the database can be permission. In other words, you and I only see it, nobody is. The people into, or the parties into that network will see the data. If it's permissionless, that means it's public. Anybody can see it. Now, the word blockchain means block and chain, a chain of blocks. When you validate the data, which is actually time-stamping a state. Anything is a state. So, for example, my identity is a state of me, right? A transaction is a state of a change of ownership, for example. When you record into a blockchain or a distributed ledger, that creates a truth-like piece of data. Why? Because it cannot be tampered, cannot be reversed, cannot be changed. The blockchain and the distributed ledger, the slight difference between the two, the data that you put into a blockchain type of technology is locked into each other, into a chain. It's an audit trace, so you can trace back to the beginning. In a distributed ledger, you don't have that chain of blocks. You distribute the data into the network. And finally, it's a little bit complicated, but there's a sense of consensus mechanism. Consensus means, very simply, I don't trust you. You don't trust me. Okay, we need somebody else to trust us so that whatever I sold you, I don't sell it twice, right? In the blockchain, the Bitcoin blockchain, you have a proof of work, which is a third party answering a riddle, a mathematical riddle, and putting, at the time of answering that riddle, is putting that transaction into a chain. In a distributed ledger, it's just a validation. The purpose is the same. Are you selling the same thing twice or not? Smart contract. So smart contract, it's just a program. If and when then. If it rains, I will sell my umbrella 5% higher than I do today. And it's automatic. So what I would have developers, they code something. We need an input, and the output is the result of a smart contract. Very simply. I'm a capital market guy. In capital market, we talk more about DLT. Why? Because you might have a central authority that distributes the data within a permission network. Permission means we know each other. Unlike a blockchain where there's a sense that it's permissionless and we distribute the data to anyone, and anyone can see everything in that network. Okay, so first of all, we need to understand that it's all about data and identity. Right? Any use case that we talk about, it's about creating that truth-like of you and I, of that transaction, where it cannot be disputed that it happened. Whether it's right or wrong, that's something else, but it has happened because it's time-stamped. That state is one and only. So think about it, it's very interesting, because then we can start thinking about golden source of data. We can start thinking about, I've issued that asset. So I'm an asset manager, for example. I have a cap table, I have units. If I don't have a big brand, you won't trust me, right? Alex comes in, sells you a property, sells you a piece of his fund, and you say, okay, come on, Alex, with that accent, is it for real? But imagine that it's validated by a third party. Imagine that you can look at the chain of data. Imagine that there's one piece of record that you can trust. Now that is amazing. So what we do as well, it's about tokenization. Tokenization is really a representation, a digital representation of an ownership, of something else. I have a right into a building, I have a right into a share. I'm a private equity fund, for example. Well, that right can be recorded on a blockchain or a DLT, and we can't dispute that I own it. We can't dispute that I sold it to you. We can't dispute that you're now the owner. And that's very, very strong, very powerful. Our focus is really in the private markets because we think there's a lack of transparency where the data is all over the place. Paper, identity is all over the place. You're known in many different ways. You have to always submit the same data over and over again to different parties. Imagine we know you as one person. Let's say ABCDEF, Alex 1, 2, 3, whatever. We know you as one. The data as well can be distributed in a controlled manner. You can select the level of transparency. For example, we have a trade. We don't want to disclose the price, but we want to disclose that we had a trade because it's the start of liquidity. And that's very, very interesting. So The most is when there's transaction where trust is needed, where there's data, for example, capital market, private markets, transactions. Where there's a list is the opposite, is where we need speed in those transactions, right? Equities, for example, where today it's in microseconds. We do not need blockchain because it's very, I would say, it takes time to validate in the blockchain world. It takes less time in the DLT, but the technology has been there for the last 20, 30 years where it's faster, faster, faster. Now, once you have that data recorded into a chain, into a DLT, then you can use other types of technology to distribute it fast. But it's really about that truth, that golden source. First of all, when I talk about token, I talk about a digital representation of something else. I talk about a digital asset. So a piece of equity, a piece of a fund, a piece of something. Not so much about the cryptocurrency. So we need to separate both. I think in terms of the last few years, you're right, in trade finance, in payments, we've seen as well in insurance. And the way it happened, it's really consortia. You know, a group of banks, a group of insurance companies coming together to answer a problem that they had. So that it's well known, right? Marco Polo in trade finance, for example. Other applications you may not know because it's a part of the architecture, which actually we shouldn't care about it. We shouldn't know, right? It's technology. Do we care about trading technology? If you're a nerd like me and you like throughput, you like risk and control, you like this technology. But you know, if you're a C in a B2C, if you're an institution, you want cheap, fast, resilient, scalable. You want attribute of that technology. So that's number one. I think as well, and that's me predicting. You know, I like to predict, and I'm always wrong, by the way. In about 6 to 7 months, you will see an explosion of real use cases, particularly in capital market, particularly when I can start issuing digital assets, particularly when you can start to invest into interesting investment opportunities. So I give you an example. Today, if I want to invest into FinFabrik shares, where do I go? I need to talk to Alex, I need to talk to Connie, I need to talk to people, right? Because it's not a public company. So there's a lot of information asymmetry. I need to get there. And I will fail. Why? Because I may not have the requirement that FinFabrik wants, I may not be a sophisticated investor, I may not have the knowledge, I may not understand the risk. Imagine where there's a platform where I can see interesting investment opportunities. For example, FinFabrik Series A. I look at it, I look at the opportunity, I click, and then I buy some shares, even 1,000, 2,000, 3,000, whatever the amount. So that's what I'm seeing. And not just us, but we have a few of friends and competitors working on really democratizing the investment, giving the opportunities to investors to have interesting investments. If you don't know about blockchain or artificial intelligence, it's game over, right? Because it has happened outside of your company or inside your company, and you better know about it. Why? Because you will be disrupted. Not just now, but maybe in the future, and you won't realize that. So you need to understand the attributes, the risk, the consequences of not doing anything. Start doing something. Talk to people like me and others. Look into website and finding information. Talk. But more importantly, do something. So I always say, let's agree violently on the future, where it's going. You know, it's crazy, it's an idea, it's the future, but let's start with something very disappointing, very small. Why? Because we'll make mistakes, because we'll fail. We are the beginning of a journey, and you cannot take, as a CTO, as a CFO, as a CEO, too much risk. Second is understanding where your architecture is today. And it's very, very difficult when you're at the top of the tree. Understand your risk, understand your cost. Why you have all these people redoing things, creating exceptions, making mistakes, how you correct them. And it's not because they are failable as people, but because maybe, most likely, and I'm one of them because I spent 16 years in investment banking, we don't have the right tools. So what you will have a new type of architecture in parallel. And there's a cost, there's a risk of having this new architecture. That is the problem. There are unintended consequences about bringing something that we don't understand. So again, I repeat it, start new. because there will be unintended consequences, because there will be double costs, because there will be risk. For us, we're always coming very small. If it's a project, let's call it a project, but let's agree that we're changing an industry fundamentally.